A lot of investors think that malls are dead. And to be fair, that may be true when it comes to kind of the middle of the road suburban malls that don't really have any unique features or anything like that. Those aren't doing too well. But not all malls are dying. And there are two groups of malls that are doing pretty well. Those are the higher end, like destination type malls and outlets that are discount oriented and have kind of a treasure hunt aspect to them and generally are in high volume, like touristy areas. So there are 2 stocks that I have my close eye on right now. I already own both of them, but I kinda wanna add to both of them. So the first stock I have my eye on is Simon Property Group. This is a company. Simon is the biggest mall operator in the world. They own a portfolio of high-end malls, including a lot under the Mills brand name. They own some of the most valuable malls in the world. The Forum Shops in Las Vegas is a Simon mall. They own a bunch of these big, large scale destination malls that have a lot of elements other than retail in them. A lot of Simon malls have entertainment venues, office spaces, hotels, things like that. So they're really destinations, not just shopping spaces. They also have the number one market share in the outlet mall industry. If you ever pass an outlet property under the Premium Outlets brand name, that is a Simon property. So Simon's numbers look really, really good. Net operating income was up 6% year over year in the fourth quarter. The company's occupancy was up to 94.9%. That was a 150 basis point increase over a year ago. Simon is able to charge a little over 2% more rent than it was a year ago because its tenants are doing really well. The average Simon tenant reported sales per square foot are up 5.6% from 2021 levels. Now, all the news isn't good. Simon has some weakness, particularly in its retail businesses. If you're not familiar, during the past, 5 or 6 years of retailers struggling with e-commerce and stuff like that, Simon, along with partners, bought a few of these struggling retail chains. Aeropostale was one of them. Eddie Bauer was bought by Simon and Partners, and J.C. Penney and Forever 21 are the two in particular that they bought along with partners that aren't doing so great right now. Now, those are it's a relatively small part of the business. Simon is very, very profitable, and the company's taking steps to correct the problems with those businesses. In the meantime, Simon has a 5.8% dividend yield. It has almost $8 billion of available liquidity to keep reinvesting into its business and has plenty of room to keep raising the dividend with just over 60% payout ratio, which is low for a real estate company. The stock trades at just a little over 10 times funds from operations, which is the REIT version of earnings. And Simon just looks like a very attractive stock all around. The other one I wanted to talk about is Tanger Factory Outlet Centers. They're the number two outlet operator in the country, but they're the only pure play real estate investment trust that invests in outlets. Simon, you have the high end malls and the outlets. So Tanger reported similarly good numbers. It grew its FFO 4% year over year, which is pretty solid considering the recession headwinds. Occupancy is at 97%, so doing even better than Simon there. Same store net operating income was up a little over 5% year over year. The average tenant sales were slightly down year over year, but 2021 was an exceptionally strong year for Tanger's business. When you compare it with pre pandemic levels, like comparable 2019 levels, sales are almost 12% higher on a per square footage basis at Tanger's properties. The company is finding a lot of opportunities to expand. Its new Nashville property is under construction right now, expected to open in September. Not quite as high of a dividend with a 4.7% yield, but with only a 42% payout ratio. There's a lot of room for that to grow over the years. Trades for just 10 times FFO, just like Simon. And I own both these in my portfolio. I think both of them still have a lot of room to grow and look like tremendous bargains at the current prices. So I don't think malls are dead. I think these are two great ways to play the evolution of shopping malls. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.